walk us through this China story. The read-through into the rest of the region doesn't seem as large as we usually tend to see it. Why not?
Yeah, hi, good morning, Kriti. That's absolutely right. Today, while Chinese markets have continued to rally, it's been a little bit in isolation. The rest of Asia kind of holding off, even some of the China-related gauges that you might expect to see benefiting across Southeast Asia. I think part of it may be to do with the month-end and quarter-end flows, so that may be people taking profits on positions that have already performed particularly well this year. Or over this more recent time periods, but also, it's just everybody is only focused really on getting their hands on whatever Chinese assets they can right now. And so you're seeing that real pile in and a bit of a FOMO trade. And I think that probably everybody is focused on that to the exclusion maybe of some of those other markets. So it'll be interesting to see whether we get that catch up coming through. We have seen gains in commodities prices as well, metals prices, iron ore. So producers of those raw materials may also stand well to benefit in due course. But as you said, today, not seeing that same follow through that we had last week.
Paul, who's got FOMO? Who's buying?
Aha, I like this question a lot, Guy. Thank you. Well, we certainly know that those in the mainland do. They're piling in willy-nilly. It's been crashing the trading systems on Friday, crashing brokerage accounts over the weekend as they try to register new accounts. As reports of people pulling money out of their savings accounts in order to put more into the stock market as well. So people on the mainland that have been in this gloomy picture of equities for so long, then, the market was very short positioned as well and very underweight China. Just a couple of weeks ago, we saw that in the Bank of America survey. So there's a lot of people that are having to recalibrate those positions to close out the short positions. Or think about this, if you're a fund manager and you've been running a very underweight China position, if you look at the emerging market gauges, for example, an ex-China gauge had been outperforming until just recently. Now, the one that includes China has pinged back above it. So you need to think about whether you want to close out that position. Not everybody does. We've heard from the likes of Lombard ODA telling us that they determined to stay away from China. They don't think that it's good to come back in again. So there is some parts of the market that are more resistant. But on the whole, lots of FOMO all over the place.
Nothing to get Paul Dobson excited than a little market plumbing. Paul, let's talk about the market plumbing around Japan as well. You're seeing a pretty big drop there. How long does that last?
Yeah, really good question. I think the Japanese market developments are more about how the market had been positioned on Friday, where we had that quirk that the stock market closed after the vote of the new, before the vote of the new leader had all been counted, whereas the yen had time to react. The yen went booming stronger on the fact that this guy is more likely to see the BOJ push for more hikes. So stock markets only had time to react today. Now we've got that cold pullback, probably everything will settle down.